Ladies and gentlemen, welcome back to the channel. We just got big data out of China that missed expectations massively. This can have big implications for the markets, for your portfolio, and for AMC stock. So we're going to go ahead and get straight into it. Hit the like button and subscribe to the channel. Number one, source your comments, questions, or concerns down below in the comment section. I love to hear from you. I try to respond to as many comments as possible, and I will opt to do that here in this video as well. Especially let me know what you guys think about AMC stock recently with this court proceeding. Are you bullish? Are you bearish? Let me know what you think about all of this information. So let's get into first things first, what you need to know. Now, the data just came out very bad, okay? Not good. So right here, China's economic data misses expectations, drops youth unemployment number from report. Whoa, that's kind of crazy because the youth unemployment number for China has been exploding recently. It's actually been a very bad problem that has been going on. You've seen this number continue to go higher. Let's go ahead and see if the futures have updated as well. It does not look like it yet. This data just came out minutes ago. Now, retail sales rose by 2.5% in July from a year ago, below expectations for a 4.5% increase, according to analysts polled by Reuters. So you were expecting 4.5%, it came out at 2.5%. Pretty bad. Industrial production rose by 3.7% in July from a year ago, below the 4.4% increase analysts had expected. Another bad miss there. And fixed asset investment rose by 3.4% in the first 7 months of the year from a year ago, below the 3.8% forecast by the Reuters poll. Now, it says the National Bureau of Statistics report also did not include the unemployment figure for younger people, which has soared to record highs in recent months. If we go ahead and take a look, it says the urban unemployment rate ticked up to 5.3% in July from 5.2% in June. Contrary to prior reports, the latest release did not break down unemployment by age. The age 16 to 24 category has seen unemployment far above the overall jobless rate, reaching a record high of 21.3% in June. 21.3% for 16 to 24-year-olds? You are young men. Like, I am 24. You need to get to work, buddy. 21.7% unemployment? That's actually crazy. On a year-to-date basis, real estate investment fell 8.5% from a year ago as of July, a greater decline than as of June. Online retail sales of physical goods rose by 6.6% in July from a year ago, the sharp slowdown from double-digit increases in recent months, according to CNBC calculations of official data. After an initial rebound from the pandemic earlier this year, China's economy has come to grips with long-standing problems and slowing global demand for its products. Exports plunged by 14.5% year over year in July, following a 12.5% drop in June. Factory activity contracted for a fourth straight month in July, according to an official survey. Domestic demand has remained muted outside of summer tourism. Imports fell by 12.4% year over year in July and have mostly declined each month from the same period in 2022. The consumer price index fell in July, adding to growing worries about deflation. We're facing inflation. They're facing deflation. You think inflation's bad? Wait till you meet deflation. That's really bad and could explain other companies such as Tesla even cutting prices. The economy is just not doing good in China, and that's a big problem because the Chinese economy is almost as large as the US economy. We're only about an apple away from China's economy, and not like a physical Apple, like an Apple company. About $3 trillion difference between our economies. A little bit less than that. Apple's now not even $3 trillion, 3 trillion market cap. So it's pretty comparable apples to apples. Yeah, pun intended, I know. But it's pretty comparable. So if you see China going into a recession, that does not look good for the U.S. and the U.S. avoiding a recession by the end of this year or 2024. Now, to the contrary, we did get good data from Japan, and Japan looks like a bright spot. Japan's GDP grew by 6%, handedly beating expectations on robust exports. Quarterly expansion came in at a more robust 1.5% versus expectations for 0.8% growth. Optimism was tempered by muted domestic demand, given a surprise drop in private consumption expenditures, despite the first employee compensation sequential increase in 7 quarters. So you are seeing a lot of good data. This domestic demand was kind of strange that it actually came in a little bit lower, but still overall good. Japan is the 3rd largest economy in the world. So Japan is pretty important, right? If we have Europe that's doing bad, if we have China that's doing bad, well, Japan doing good is a good thing for the economy. It's a good thing for the markets. It's a good thing for us here in the US or Canada. That's most of you guys watching this video are in the US and Canada. The US tends to be the last domino to fall in a global recession. So as long as we have some other countries doing okay, you don't have to see a huge slowdown, a huge crash, whatever, economic growth basically drying up. Now, this is having a pretty negative effect on the futures. The Dow futures are about to go negative. The NASDAQ is only up about 0.25%. This comes after just a minute or two of digestion from China's economic data. Now, this is going to have a pretty big effect on the markets tomorrow and probably have a pretty negative effect on the markets. Now, as you guys know, what's been happening with AMC Stock recently? Well, the judge approved the settlement, and that has been no bueno, not very good news. But what I can tell you right now is nothing is for sure, nothing is for certain about dilution. We might get dilution, we still might not get dilution. At some point down the line, sure, but the second the reverse split happens, probably not. The markets are expecting massive dilution the second the reverse split is done. I think that is a very flawed narrative, and I think that narrative has already been priced into AMC. So by the time we get the reverse split and people are looking around like, where's the dilution that does not come instantly, that could be very positive and help to squeeze AMC stock up higher, because ultimately these hedge funds and institutions cannot afford to remain in their short positions. They are fully betting at this point, if they stay in short positions, that AMC is going to raise capital, and a lot of it as soon as they possibly can. When they realize they're not going to, and that AMC has $600 million worth of liquidity, they can kind of wait out any short-term pressure. Well, that's not what the hedge funds and institutions are expecting. They're hoping for massive dilution once AMC is able to do so, and I don't think that is coming. After all, think about this quite logically. It's in Adam Aron's, AMC's, and the board's best interest to not raise capital immediately, to let AMC stock rally, to even cause a short squeeze or help cause a short squeeze, and then to dump stock on the market, to nuke the stock to some degree after a short squeeze. That is the best case scenario, because then they get more bang for the buck. They don't have to dilute shareholders as much. And believe it or not, Adam Aron does have a lot of his money currently still in AMC stock. He is the largest, quote unquote, retail investor of AMC stock. So when he dilutes a company, he also dilutes himself. He is taking down the value of his money as well. And that's important to remember. But if you could dilute the stock during a short squeeze or some kind of rally or move higher, it's not going to be a big deal. Even if you dilute 1% of the float or some small number, considering the reverse split and considering the share price of where AMC will be, that seems like the most obvious path of succession from here. Now, if we take a look at some of the data, you take a look at the option activity, 377 orders today worth $94 million. This is equivalent of what you have seen in any given week for AMC. And you've seen that today on a Monday. With a positive order value of 1%, it looks like everyone has disregarded any type of risk management. At the same time, look at the cost of borrow fees. Cost of borrow fees absolutely soared today. This showing a lot of demand for people to go out and short AMC stock. If you were not short before this ruling from the courts, you have absolutely no business to be short at this point. Cost of borrow max, 961.5%. This means hedge funds institutions are paying out about 2.5% every single day to be short in AMC. Cost bar average 688.75%. Cost bar minimum last we knew was about 336%. Elevated all the way across the board. About 27.87% short interest of free float, up 1.17% on the day, and 143.89 million shares that are currently sold short. Now, I want to show you guys some of the 13F filings that we're also seeing coming out for AMC, and this is following the same trend as we have seen with some of your Canadian banks, but a lot of the banks out there have actually been buying the dip like crazy in AMC stock. I don't know why that is or for what specific reason, but look at Morgan Stanley. Morgan Stanley now owns about 2.9 million shares worth of AMC as of yesterday, August 14th, and they increased their position by 231% within the last quarter. Norges Bank, I've never heard of that one. They own 89,000 shares of AMC. They increased their position by 409%. Basically, across the board, banks are buying the dip. And a lot of other firms are actually buying the dip or even selling out of some of their bearish positions. Even State Street, they increased their share position in AMC by about 2%. Aristides Capital LLC bought 121,000 shares worth of AMC. Two Sigma Advisors bought about 2% more of AMC. A lot of new positions, but it's kind of hard to see here. The letters are kind of small. Even Sequoia, right? They increased their call position by 11.5%, increased their put position by about 8%. So a lot of people are actually making some bullish moves here for AMC stock, which I do find quite interesting. And especially some of your banks. A lot of your banks are actually buying the dip like crazy, which does just lead me to believe this story is far from over. This story is just getting started. And now that we have this court proceeding out the way, AMC stock is actually going to be able to move. The stock's going to be able to move quite a bit. Even here in after hours, what we've seen today, AMC stock was up 1.77% to $3.45 per share. Again, if you're short in AMC, there's absolutely no business you are doing being short in AMC. It just makes no logical sense given where the cost of borrow fees are today and given the stock just dropped 35.5%. Like, if you guys ever short a stock when the stock is down 35.5% on any given day, unless the company's going bankrupt, you probably deserve to lose all of your money. I'm just going to say that for how it is. So there you have that. I don't know how this data that we covered here in this video is going to affect the markets, but probably not in a good way coming tomorrow. And I do think right now it's very interesting for AMC stock. I do think you're going to bounce from here. Now, to what extent, I don't know. Again, markets are under the assumption we're going to see massive dilution the first chance AMC gets, and I don't exactly think that's going to be the case. But we will see, and that could mean a lot more upside. And ultimately, that's what we're going to see. Shorts have to cover on short positions, and they have no inkling to actually do that right now. You can see that by the option activity. Almost 100 million worth of options and 1% positive. That's absolutely crazy. So, thank you for watching. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. My name is TCI. That is going to do it for this video. I will see you in the next one.